After 10 days of sideways consolidation, Bitcoin broke upward from the horizontal range, reaching as high as 36,000. Will this mark the top for Bitcoin, resulting in a correction, or could we expect a gradual increase upwards over the coming weeks? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the high time frame charts, going over what has happened in the last 24 hours, the rally up to 36,000, what it meant for Bitcoin, and will we see our price again? And we'll be discussing the short-term charts, what is happening in the short term, and could we even see a correction from here? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our trading channel. We have our VIP group where we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. The VIP group is not just a trade setup group, it is also an educational place. We have group chats, our general chat, our trading chart and education chat. I'm here daily teaching everyone how to trade, showing you guys charts and developing your skills. Our news, video, help, and of course, our trade setup chat is in here as well. If you're interested in joining a community of 600 members, go ahead and contact me in the pinned comment of the free channel to find out more information. If you want to see our trading track record, you can click this link. From this month onwards, we're going to be condensing our results into quarterly months to better align with our minimum 3-month memberships. Let's go ahead and get stuck into it, starting on the market data. So, how are we looking? And before we do, actually, just mind me, I am still very sick, so hang with me in today's video. So 24-hour volume is down 8%, sitting at a total of 101 billion. 24-hour liquidations are down 8.44%, sitting at 127 million. Now, by no means are these numbers small. 127 million liquidations is massive, and 101 billion in volume is still very high. So although the last 24 hours have seen reductions, overall, the volume, the volatility, the liquidations are still actually relatively elevated. If we take a look at those liquidations, of the 127 million, we saw a whopping 91 million come from those long positions and a huge 35 million come from those short positions. If we take a look at what Bitcoin did, we saw this horizontal range we've been consolidating within for the last couple of weeks. We told you guys if we saw a break out from this level, we would see a massive surge in volatility as we would have filled that VRPV gap, which we have now filled. We have filled the VRPV gap. We saw massive volatility. We saw a massive surge in price action, retesting this upper level at 36K. And with that, a whole bunch of people would have jumped into longs and they would have got liquidated as the price came back down. So we saw a whole bunch of those long positions being liquidated in the last 12 hours. Moving over to the market, the DXY and the broader markets. The DXY is looking okay here. It is starting to show some signs of weakness, and of course it is showing signs of decreasing strength. Again, we do still expect the DXY to push upwards to the 108 level. Now, this is expected provided the DXY can remain above that 50 EMA. If the 50 EMA is lost, that would signify this weakness that has been developing over here has now actually flipped into a downtrend, and then we can expect the price to continue into this cluster of support. Remember, when the price compresses against the 50, it suggests we have weakness. It suggests decreasing momentum, decreasing volatility, decreasing velocity, as suggesting we are weakening. The strength of the trend is starting to flip. So if we do see a flip in the 50, that is when we expect again the downtrend on the DXY to resume, and we can then expect this uptrend scenario to be invalidated. Until then, we do expect a uptrend to continue, although the probabilities are starting to slim. Moving over to the broader markets, the S&P 500 saw a phenomenal bounce on that weekly candle, actually retesting and bouncing from that high time frame level of support. Again, this is a very crucial level the S&P had to find support above, as it marked a massive 550-day long level of support, guys. Again, if we lost this level, if we remained under this level for quite a period of time, we could have very well continued downwards. But again, we have found support over here, which is very good to see. The downtrend is still intact, however, but again, it has bounced, it's found support. The probabilities of the breakout are starting to spin around. So overall, it is looking relatively better in comparison to how it was looking a few days ago. Moving over to the Dow Jones, the same scenario over here. It found support and bounced from our major level of support. As we were saying for the last couple of days, support is support until it is not, and we do not expect corrections toward the downside until that support level is lost. Remember, guys, support is support, resistance is resistance. Do not front run these levels. Wait for confirmation on these levels before making decisions. Moving from there into the economic data. Of course, we did have the Federal Reserve interest rate decision, and that came out basically on par of what was expected, which was a no change event. So a non-event, guys, on that interest rate decision. Let's go ahead and jump over into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, we're going to go ahead and start on the macro charts. And Bitcoin has officially closed that monthly candle above 32,000. 32,000 is a level of utmost significance on Bitcoin's chart, as it doesn't only mark a major macro trigger point, but it actually marks a 500-day long resistance. That resistance marking the trigger point of a macro uptrend. So when Bitcoin has closed that monthly candle above this level, which it has, it actually marks Bitcoin moving into a macro uptrend. Now, that also suggests this level now has become a support. This respective level of resistance, which was a resistance for 500 days, is now a level of macro support on the Bitcoin chart, meaning Bitcoin will remain in a macro uptrend provided a monthly candle does not close below this level again. This is phenomenal for the bulls and very, very good for the high time frame continuation upwards, as it provides a steady and very sturdy base of support. Remember, a strong resistance, and this is a very strong resistance, it's a 550-day long resistance. A strong resistance becomes a strong support. But this does not mean Bitcoin's immediately going to go upwards and just permanently go upwards of 46k. It can suggest Bitcoin could potentially come back down to retest 32k at some potential point. And we'll be discussing the likelihood of that in today's video and what you need to be looking out for to see if that move will actually play out. So let's go back to the monthly chart. As you can see, this is our 4-year cycle chart. According to the monthly chart, every single time we get a monthly candle close above that horizontal red line, we see a macro continuation upwards to retest the dotted trend line. The dotted trend line in this instance being 48,000. So we have seen that monthly candle close. We do project a move up to 48,000, provided a monthly candle does not close back below 32k. Very important stuff. Moving over to the daily chart, what we can see over here is, of course, we do see a little bit of weakness developing. Now, weakness is again relative to the time frame you are viewing. So if we move over to, for example, to a weekly chart or a 2-week chart, you can see there's almost no weakness being shown. If we move over to a daily chart, however, we can see a little bit of a bearish divergence popping up. And if we move over to a 12-hour chart, we can see that divergence is much more aggressive. So weakness is relevant to the time frame you are viewing, and that is why it's very important when you're determining whether or not the price is going to move down or move continuing up. You have to also take a look at the short-term price action, excuse me, as the short-term price action will determine whether or not these trigger points that will confirm high time frame continuations down or up will actually be, again, invalidated or confirmed. So we'll go over the short-term in a second. However, on the daily chart, if at some point we do see a breakdown of this RSI trend line, that will signify the uptrend we have developed over the last month will have been lost, or meaning we will lose the strength of which the uptrend is being formulated on. So if we do see the RSI drop below this trend line, that will signify the price is very likely to push back below 32,000. Now, this could happen at any point in time. The most ideal scenario would be a retest of 32,000 and a bounce back upwards. But if we do see that RSI break back down, that should be an alarm bell in your head. That should be a massive warning suggesting Bitcoin could potentially correct aggressively toward the downside. So definitely watch out for that. Until that happens, of course, we are in an uptrend and everything on the high time frame is looking pretty good. If we move over to the 2-week chart, we can see that the Gaussian channel midline has been broken. Now, according to the Gaussian channel, every single time we enter the Gaussian channel from the bottom side up, particularly when we break through the midline, the probabilities of us breaking through the upper band of the Gaussian channel significantly increases over the probabilities of us breaking back below the lower band. So what does this suggest? It suggests the fact that we have closed a fortnightly candle above the midline tells us we have a significantly greater probability of seeing any price point above 38,000 before we see the price break back below 22. So what does this chart tell us? In essence, it invalidates the bearish argument of sub 20,000, okay? It invalidates the bearish argument of sub 20,000. So according to this chart, we could potentially see 22K, okay? But it's very unlikely we lose 22K prior to breaking above 38 due to the fact that according to the Gaussian channel, when we break through that midline, we almost always see a break of the upper band. If we break from the bottom side up, or if we break from the top side down, we always break the lower band, okay? So the Gaussian channel is, of course, very bullish right now. Moving over to the smaller time frame charts, what we can see is Bitcoin is still within the overall range, right? We have this horizontal range that we developed over the last 8 days. We saw massive deviation toward the top side, retesting that $36,000 level. Of course, grabbing a massive amount of liquidity over here, trapping a lot of late longs in and nuking the price back down, liquidating about $90 million in positions. We are now retesting this respective level as support. So our prior level of resistance is now being retested as support. It is absolutely paramount that this level is able to provide support and hold as support. If we see the price break below this level, we are very likely to come all the way back down and retest the midline of this current horizontal range, which would be around 34,000. Of course, like we said in yesterday's video, or the day before, if we lose 34,000, that is going to be confirmation of a drop lower. And if we drop into this range, it is very unlikely it holds, because we've deviated to the top side now. We are more likely to deviate to the bottom side and fill the gap back to 32. So like we said, just because we've closed that monthly candle above 32 doesn't rule out the possibility of a retest. There is still a possibility, and that possibility becomes greater if we break from this trend line, becomes even greater if we lose 34K, and becomes almost certain if we lose 33.4. So if you're watching for corrections, watch for loss of these trend lines. Until then, guys, support is support until it's not. And we have a double confluence support, meaning we not only have horizontal support over here, but we have our diagonal level of support. This diagonal level of support did deviate down twice, But before then, it's marked support 4 separate occasions. So if we do see a bounce, we are going to see a bounce from this level. This essentially is the last chance for Bitcoin to bounce back upwards, or we are going to start to see a downtrend develop, not only for Bitcoin, but for altcoins as well. So again, you can take longs here. And I would advise, take some longs if you want to, but keep those stop losses quite tight. Look for shorts, look for coins that are showing early or preliminary indications of exhaustion. Take some shorts. You should be hedged both directions right now. Moving over from that chart to the total cryptocurrency market cap, we can see the total cryptocurrency market cap has actually reached a high time frame level of resistance. This, of course, is going to be our weekly resistance. What does this tell us? This tells us that although Bitcoin is in a macro uptrend, the cryptocurrency market as a whole is at resistance. The cryptocurrency market as a whole is not in a macro uptrend yet, and that opens the doors to a possible deviation above trend. This is actually relatively bad for Bitcoin, as if the total cryptocurrency market cap does reject, we are also likely to see Bitcoin correct, right? Bitcoin makes up 46% of the total cryptocurrency market cap. So again, if we want to see the crypto market as a whole become macro bullish, we need to see the price clear above and close a weekly candle above this level, guys. So definitely watch out for this. This is a warning sign. This is alarm bells. This is danger. This should be in the back of your mind telling you, well, this hasn't broken up. This could potentially result in Bitcoin correcting. So definitely do not underestimate that right there, guys. We're watching very, very closely. So I'm going to wrap up the video there because I'm not feeling very well, but I hope you learned something today. Hope you now have a few things to keep your eyes on. If you're looking for continuations downwards, we are looking for breakdowns of these levels. Until then, this area is support and you should expect bounces. If bounces don't occur from this level, we do expect continuations every single time we break a level of support, whether it be this diagonal support, whether it be the 34,400, whether it be a 33,400, the probabilities of a retest of 32,000 become greater and greater. According to the high time frame chart, 32,000 could be retested, and it doesn't matter if it is, it only matters if we close a monthly candle below it. If we do retest 32,000 and momentum has shifted negative, that is going to be a warning sign that 32,000 may not hold a support, and we are likely to come back to retest this uptrending support line. So is Bitcoin out of the woods? It is very, very hard to say, okay? We do have some levels we need to clear upwards. Is Bitcoin looking very strong? On the high time frame charts, it is looking great. However, with the recent bearish divergence, with the exhaustion pattern developing, with the surge in deviation to 36K, if the level of support we are retesting now does not formulate a base of support and we do drop back down, 32K is possible. And if 32K doesn't hold, well, then this whole thing is going to come tumbling. So definitely keep your eyes on it. Do not be overly bearish. Do not be overly bullish. The best thing you can do right now is trade the levels. Thanks for watching. Catch you guys on the next one. Cheers.